Ladybird deed and taxes. How does it work? Basically, there's going to be two different types of taxes that we're going to talk about. The first tax is real property taxes, which is what you pay every November of the year. There's going to be a new market value, that's a reassessment in property taxes to the new market value. So if the property now is, the market value is 300,000, but when they bought it, it was 100, it's going to be assessed at the 300,000, and your new tax bracket or tax base is going to be at 300,000, right? So there is going to be a reassessment of property taxes, of those annual property taxes. The second thing is capital gains taxes. That comes into play when you sell the property. So what you do is you get an appraisal done of the property upon the passing of the person. That'll set a value of date of death. Then when you go to sell the property, okay, you're going to already have that appraisal. So your accountant is going to be able to look at the value of the date of the death and the value of when you sell it. You're going to pay capital gains taxes if there's a difference between that. So if the value at the date of death is 500,000 and you go to sell it for 500,000, you're not going to have a capital gains because you would have gotten the step up in tax basis. However, if you hold it and you sell it for 600,000, you're going to have to pay a capital gains tax of that $100,000 difference. I'm not a tax attorney. I'm not a tax accountant. For more detailed information, talk to your tax accountant.